And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning, live from Channels HQ. I'm Ladi Williams. First off, let's take a look at what's in the news now, starting with oil prices. We see oil prices inch higher today as the dollar eased, but global recession worries and concerns about China's rising COVID-19 case numbers are denting demand from the world's top crude oil importer, and that's weighed on sentiment in the market. Brent crude futures rose 44 cents to $87.89 per barrel, while the US WTI crude futures for January began trading Tuesday, rising 30 cents, about 0.4% at $80.34 a barrel. Both benchmarks had dived more than $5 a barrel on Monday, hitting 10-month lows after the Wall Street Journal reported an increase of up to 500,000 barrels per day would be considered at the OPEC Plus meeting on December 4th. Prices rebounded quickly in full after Saudi Arabian Energy Minister Prince Abdulaziz bin Salman said the kingdom is sticking with output cuts and not discussing a potential oil output increase with other OPEC oil producers, and that's according to state news denying the WSJ report. And Nigeria now ranks 7th, down from 5th place on the Organization of Petroleum Exporting Countries crude oil production list, and that's according to its monthly oil market report for November. The latest findings by OPEC shows that Nigeria's output for the month of October was just 1.014 million barrels per day, pushing it behind Algeria's 1.06 million barrels per day and Angola 1.051 million barrels per day production. Energy experts attribute the drop in the country's position among its OPEC peers in crude oil production to theft and pipeline vandalism. And as part of efforts to improve non-oil exports, the federal government has launched an initiative aimed at driving the process for improving the nation's economic diversification. Speaking at the launch of the program in Abuja, the Minister of Industries, Trade and Investment, Mr. Adeni Adebayo, said the federal government will continue to support exporters through the provision of incentives and opportunities to do business with ease. Take a listen.
Very much.
This is a campaign for Nigerians to support the initiative of the Nigeria Export Promotion Council to drive the non-oil sector, seeing its significance to the nation's socio-economic development. One of the present administration's concern is how to diversify the economy, and the Minister of Trade buttresses on this, seeking the cooperation of exporters to guard against export rejects.
It is our hope that this campaign will stimulate the consciousness of Nigerians to this reality. The diversification of the product base of the economy is the key to employment generation, wealth creation, and poverty reduction across the country.
Statistics from the Nigeria Export Promotion Council shows that the non-oil sector recorded some growth this year, as it exported products worth $2.6 billion in the first half of 2022. The figure represents a 62.3% increase from the $1.59 billion exported within the same period in 2021. The launch, according to the NEPC, will further improve the figures in the days to come.
There is still more grounds to cover in meeting our vision of making the world a marketplace for Nigerian non-oil exports. Against this background that we conceive the Export for Survival campaign as part of strategic initiative to increase awareness and ensure overall growth of the economy through non-oil exports. The objective is to sensitize and stimulate Nigerians to imbibe and sustain the non-oil export culture. In this regard, the Expo Week and other targeted programs of the Council will serve as veritable vehicles in deepening the non-oil export performance.
There were words of support from sister organizations as they promised to make the non-oil export drive sustained.
If you would recall, I think way back in 2015, we had signed an MOU with the NEPC to ensure that we have a synergy that deepens the investment promotion drive to take advantage, to ensure that more investments are channeled to the non-oil export sector of the economy.
The campaign tagged Export for Survival is then launched. The campaign aims at supporting and getting the buy-in of Nigerians towards economic diversification through the non-oil sector.
Now to our next conversation. The Central Bank of Nigeria's Monetary Policy Committee is set for its final meeting of the year, where deliberations on the next policy direction going into 2023 will be made. For analysis now, we have Kelvin Emmanuel, CEO, Derry Hills, joining us via Zoom. Great to have you on the program.
Good morning, Ladi. Thank you so much for having me.
Good morning. So it's the D-Day, decision day by the MPC, and we know the CBN has been trying to mop up excess liquidity. You know, we got that report yesterday about M2 hitting about 50.5 trillion. Seems high. What do you think drove that?
So, you know, the M2, which is like a combination of cash, check deposits, and convertible notes, hitting 50.5 trillion should not surprise anyone. The reason is because if you look at the fact that the CBN has consistently violated ways and means lending through Section 38 of the CBN Act as amended in 2007, and has basically created out of thin air through quantitative easing $49.2 billion, because according to the CBN bulletin, in the month of September, the governor of the central bank still advanced the federal government 749 billion naira from that window. So he's not stopping. He keeps giving money. Basically what they call helicopter money in a kind of expansionary approach towards the economy. The problem with that is you have so much money circulation, which has hit a crescendo, and you want to convert it into a 40-year government bond. And you have a situation where there's so much cash in the system, eating up the economy, chasing too few goods, and inflation continues. Double digit above 20%, currently 21.09%.
And do you think the Naira redesign is going to do justice in mopping up all that excess liquidity?
It won't. The reason why it won't do justice is because the argument that you have more cash outside of the banking system than you have in the banking system is not tenable. And the reason is because the financial inclusion in Nigeria places the level of banked to the unbanked at less than 50%. So the question is, when you look at global precedents, you ask yourself, is it a bad thing to have cash, so much cash outside of the banking system because you have an informal economy that has a majority over the banks? Is it a bad thing? No. The answer is no. It's not a bad thing to have so much cash outside of the system. So you using Naira design as a means to mop up so much cash in such a short window, saying that within the space of 90 days, you're going to mop up 2.7 trillion banknotes, yeah? And it's very close to an election. It's going to create some kind of cataclysmic effect that we've not even started seeing the impact yet. I don't agree with the CBN's position that the way to curb the problem that you currently have, considering that the central bank continues to give the federal government ways and means lending, overdrafts. They continue to do it. It's not a viable solution at all.
And, you know, talking about that informal economy and all of that money that's outside the banking sector, if that continues, wouldn't that make it hard for the monetary policy, policies to actually, take effect on the economy?
So here's the problem, and this is what the IMF, the World Bank, several people have continued to encourage the Monetary Policy Committee of the Central Bank, that you cannot keep raising the monetary policy rate, which is currently 15.5%. It's been raised by 400 basis points over the last 12 months. You cannot keep raising the MPR, and the fact that they've raised to 15.5% means that the rate at which they give the commercial banks money is 16.5%. And you're trying to align that inflation to interest yield curve. You cannot keep raising the rates as a means to fight inflation if you keep doing what is eating the economy and causing inflation in the first place. It's like you saying that you're going to turn on your gas cooker at home, yes, and you stand the risk of an explosion. You want to stop the risk of explosion, but you don't want to turn off the gas. That's what the Central Bank of Nigeria is doing. So you open the tap for you to meet up the budget deficits of the federal government, which has risen to 11 trillion naira, and the government expects to only have 2 trillion naira in revenues to be able to plug that gap, which means that whoever becomes president in 2023 For you to plug the budget deficit, you need to borrow $20 billion or find $20 billion in some way to plug the budget deficit. So how do you intend to slow down inflation by raising MPR when you keep doing the very thing that is causing inflation in the first place?
All right, Kelvin, what do you think is the realistic way now to tame inflation in Nigeria?
So the inflation is both cost push and demand pull. I don't agree with the idea that inflation is only demand pull. It's both cost push and demand pull. The practical solutions are broad. Number one, the federal government needs to float the exchange rate, and adopt a floating exchange rate mechanism. It needs to amend the Finance Act and move from inflation targeting to price stability. The federal government needs to understand and say, and this is also the advice the Central Bank of Nigeria, they need to understand that the exchange rate contributes 70% to the cost of inflation in Nigeria because of the imports that goes into production and consumption in Nigeria. Now, for you to be able to stabilize the rate, you need to float it. You need to bring in FDIs as certificate of capital import register with no tap. You need to bring in NXP proceeds from companies who export, who currently are diverting or buying machineries abroad and bringing it into Nigeria to sell it to avoid selling at the official market window as a means to create like liquidity of FX in the system and stabilize the currency. When you do that, what will happen is that the level of inflation, it begins to teeter, it begins to slow down. The Central Bank of Nigeria needs to really focus on its open banking as a way to bring in the informal economy into benefits of the banking system, which is one of the four benefits: credit, loan. You cannot deny the fact that today, as we speak, access to credit is a major problem for businesses to be able to create products and value in the economy. So you need to focus on increasing government revenue so that you don't accumulate a system where there's so much budget deficits and the government has to rely on CBN ways and means lending window, which is heating up the economy and causing inflation. It is my belief that the direct intervention programs that the government has run through the Presidential Fertilizer Initiative, through Anchor Borrower program has not been successful. And one of the major defects that it has is the fact that the structure, the financial model of that direct intervention is flawed. It's a model where the central bank that is a lender of last resort becomes a lender of first resort and resorts to becoming like a guarantor, a 100% guarantor of the loans it gives out to all kinds of companies and loans that are not verified, and that has currently a huge NPL, a huge hole on the balance sheet. Yeah, it creates like a systemic and institutional risk to the Nigerian economy. So the Central Bank of Nigeria needs to move away from direct intervention programs to allowing the financial institutions and commercial banks to lead and have the credit guarantee companies, the CGCs, as guarantors or obligors that will carry the risk of those decisions. Because the Central Bank of Nigeria is not designed to lend money to individuals and to businesses. You know, it's a lender of last resort, not a lender of first resort. So imagine what will happen when the likes of Fitch, Standard & Poor's and Moody's, they sit in a meeting with CBN officials and they're reviewing the balance sheet of the central bank and they're asking them, how come you have 500 billion, for example, how come you have 300 or 500 billion hole in your balance sheet? And they say, oh, we give out loan to 20,000 companies that are into production of food, and you can't really measure the impact. And you can imagine the kind of systemic risk that creates in the economy. So that model needs to change. For you to be able to create production and solve the demand pull problems that the economy has, to raise production, you need to focus on the financial model through which credit is given to the real economy.
But we saw the IMF, made some recommendations to the CBN. One is for the CBN to allow banks, determine the buy-sell rate in the forex market. How do you see some of these recommendations?
I think that the idea of allowing the banks to take the lead on the rates through a system called willing buyer and willing seller is a masterstroke. It's an idea whose time has come in Nigeria, because the things that we've always feared, that if you float the exchange rate, Naira is going to go on a free fall, it has already happened. Naira is on a free fall. Naira is trading between 780 and 790 Naira today. Yeah. if you have an economy, for example, where the government has its own subsidized FX rate that it gives to people that it knows and its cronies, and then you have the official market, the parallel market, which is the real market backed by liquidity, and there's a huge gulf between it, you're going to have arbitrage, you're going to have round tripping, you're going to have all kinds of corruption and issues because there is an incentive to do so. People are going to find a way to game the system, both from within and without. And that's the problem. So on the recommendation that the governor of the central and his team should float the exchange rate and adopt the fixed floating mechanism, it's a masterstroke. It's a good idea. It's something that the World Bank president also had recommended to the BP months ago when he traveled to DC for meetings. But on the idea that the IMF says the Nigerian government should raise Federal Inland Revenue Service to raise value-added tax back by 100% from 7.5 to 15%. I think it's a bad idea. And the reason is because there's so much pressure on the economy now. This is not the time to begin to align Nigeria to SSA countries in ECOWAS on the tax structure, benchmarks in ECOWAS. I think VAT is around 20% in Ghana, if I'm not mistaken. This is not the time. There's so much pressure on the people. This is not the time to raise VAT from 7.5% to 15%. On some other ideas that the IMF made concerning banking structure, the banking structure in Nigeria, about the NPL of banks, weighted average, the fact that it's dropped from double digit to single digit. There was a time, when First Bank, for example, had the highest NPL at somewhere around 27 to 28%, and that has been down currently to around 5.66%. I think it's a good idea, but I also think the Bankers Committee and the Bankers Committee needs to pay attention to the fact that the capital adequacy ratio of Tier 1 banks is too low. In my opinion, at 15%, the Tier 1 capital, additional Tier 1 capital is too low because considering the fact that since the banking recapitalization, there's not been another recapitalization events to reduce, in my opinion, the number of banks and go put them through stress tests. I think there's something that they need to revisit because when you look at the fact that the total risk capital over the total risk weighted average of Nigerian banks, it places the banks at a systemic disadvantage. I'll give you an example. You look at Access Bank. Access Bank has 18% of all banking deposits in Nigeria. Access Bank's capital adequacy ratio is somewhere around 17.5%. GT Bank is at 22%. In my opinion, the capital adequacy ratio of Tier 1 banks should not be lower than 20%. This is going to create some kind of stability and ensure that if there is any stress in the future, the banks can go through it. Stress test is something that central banks conduct for these major Tier 1 banks to see that they are healthy and that if there is any shock to the system, that they can weather it. So, on those recommendations, the IMF also made a recommendation about the intervention programs of the Nigerian government, Presidential Fertilizer Initiative, and COBRA's program. I don't agree with the IMF that has been successful. Social investment programs like conditional cash transfers, I don't think those programs have been successful. I think those programs is fraught with a lot of corruption and lack of transparency, and the impact is something that we don't see on the ground, because if you see the impact on the ground, you realize that we can't have those programs working and 133 million Nigerians, or 63% of the population, in multidimensional poverty. Their per capita income, for example, has dropped by 47% from about $3,099 to $2,100 within the last 8 years. So how can you, on one hand, be praising the federal government and saying that their intervention programs are successful, and on the other hand, their per capita income has dropped by 47% in 8 years? And as we speak today, 133 million Nigerians do not earn up to 1 million naira in a full year.
Quite incredible. All right, we'll be watching out. We have the final MPC decision meeting for the year. That's later today. We'll be getting that decision. I'll be looking out for it. But thank you so much, Kelvin Emmanuel, CEO, Derry Hills. It was great having your perspective.
Thank you, Larry. I appreciate the opportunity.
Thank you. All right, we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. This is Business Morning. Welcome back for Commodities Market Update now. We have Oluwatomi Mayowa, analyst, financial derivatives company, join us via Zoom. Great to have you on the program.
Thank you very much, Daddy.
So we're seeing volatility in the oil market again, as usual, and this time we're seeing Brent actually rising this morning. What's driving sentiment in the market? Is it still China?
Okay, so it's true that Brent price actually went higher this morning, and don't forget it lost about 5% yesterday on one stronger dollar. You know, the US Fed has actually raised rates by another 75 basis points, and that has actually strengthened the dollar. And, you know, when the dollar actually strengthens, it means, you know, what happens is that, you know, oil price will actually fall because we expect that oil price will become, it will become cheaper to actually buy oil with dollars as a result of that the strengthening of the dollar. And also, what also contributed to that decline yesterday was that, the China, the COVID cases in China actually, increased more than what it used to be before. And you know that China is a top importer of crude oil. And so investors were actually factoring that in. In fact, there were about 3 mortalities, as at yesterday. So all of those actually, drove prices down yesterday. And what was the top of it yesterday was that, there was a news that OPEC was going to increase oil production. There were plans for OPEC to actually increase oil production, by 500 basis points, which is about 1.2% of total output. But this morning we saw that, I think as of yesterday, Saudi Arabia came to, deny that talk, that they were going to probably increase, of which they even, had to emphasize that if they were going to even do anything, it was to cut down, oil production, which extent cuts, which is already at about 2 million barrels per day for November and December. They planned. So if there's anything they were going to do, they were actually going to cut, not to increase. And so that actually fueled the bullish sentiment in the oil market this morning.
And instead of an increase, they're saying they would rather cut. So do you think it would be a 500,000 barrel cut?
We saw about 2 million. I think they said they were going to cut it further. So that means it's not going to be lesser, it's going to be more, probably 3 million barrels. Because their forecast for demand is actually lower. So because of the interest rate hikes and the COVID cases and the zero COVID policy in China, all of that are actually bringing the outlook for demand. And so they don't intend to actually increase production. It was very clear. Saudi Arabia.
Right. And looking at liquefied natural gas, we know that Germany they're ramping up, plans on getting their floating LNG terminal. But we're seeing LNG price up about 5.62%. What's driving that?
Yeah, very true. The price of LNG has actually increased. Although it's still quite less than what it was when the Russian-Ukraine war started, and we've seen that Russia has actually cut their sale of gas to the European countries, because as a retaliation for the sanctions on their economy, and so that was why prices skyrocketed at that period. But now what we've seen it trend downwards initially because of the fact that the weather conditions in Europe actually eased. There was warmth, so it reduced the demand for gas and all of that actually. But now there's a forecast on colder winter in December, and so that is actually fueling the sentiment in the gas market. And this is actually good news for Nigeria because gas actually accounts for about 14% of total exports. And so as a result of that, we should see improvement on our trade balance as a result of this increase.
And obviously we've seen gas and oil prices, hit, all-time highs, this year. Do you see them creeping back to those prices, going forward, or is it over, hitting those highs?
Okay, so I think for crude oil, based on what we said, like I said initially about OPEC's plan to probably cut further, in its next meeting in December 4th, and also considering the fact that the European countries have actually said they were going to ban Russian oil imports, as at December this coming December. All of that are actually supporting, tightness in the oil market. And so I think that prices will, trend upward, because the COVID cases in China might later be, dealt with, as it usually is, because at the end of the day, it comes up and then they are able to get hold of the whole issue, and then demand will increase again. So I think prices will actually trend upward, but we may not see it go as high as 100 as it was, before, because of interest rate hikes, because the the US Fed has actually said they're going to continue to increase interest rates until they bring inflation to their target. And other central banks are not also resting about, reining in on inflation. So that would actually taper the pace of increase, actually. But since the supply tightness is still there, we're going to see oil price trade to about 90 barrels and all of that. Then for gas, the weather forecast, the colder weather winter for December would actually support price and gas.
All right, let's look at cocoa prices now. I see that's down about 0.77%. It looks like it's weather conditions there.
So actually, cocoa pricing has been a bone of contention between the industry, the chocolate industry, and also the top producers, which are Ghana and Ivory Coast. It's been a major bone of contention, because what it is about the cartel and the premium they want to they are exerting on the industry to actually pay to farmers. Is actually bringing that contention, and these industries are not actually ready to pay that amount of money, because talking about the whole cartel thing, because it's comparing it to oil, because that's the drive. The idea behind the oil is also what they want to establish. And so, but then if you look at it, the commodity we are talking about here is chocolate, and which it's made from cocoa. And it's when the cocoa is actually harvested, they have to be sold, because they are subject to spoil. They can easily spoil, and so as a result of that, you have to just sell it. Without, compared to oil, it's the oil that's always kept under, kept in the ground, and they can decide to lock it anytime they like, and affect, and be able to stabilize to influence prices. Unlike cocoa, it's not possible to actually do that. So they've been that bone of contention with the country. So we've seen that that thing actually affects prices of cocoa, although weather conditions are also affecting cocoa supply.
All right, it's all about the MPC today, final meeting, for the year. What are you guys expecting at FDC?
Yeah, so we expect that they raise rates again by 50 to 100 basis points. This time, it was about 150 last time at the last meeting. So they're going to be less aggressive. But the fact that inflation is still, increasing, and almost all of our trading partners have actually raised rates. And, the MPC would like to also narrow the interest rate differential between other trading partners, and also we want to ensure that there's no capital flights. And so that's what will actually support that increase. But this time it's going to be less aggressive, because month on month inflation has started declining. It declined for the third consecutive period, and the pace of inflation increases has actually declined compared to what it used to be about previous months ago. So that's why we're going to see that less increase in reduction in the pace of increase And much more, what's is more actually important, which the IMF also pointed out, is CBN's loan to the government, which should actually which they should start reducing, because normally it should be 5% of previous revenue, but we've seen it increase to about 22 trillion naira. So that's a lot, and that's quite putting pressure on prices. So it's something that should be noted that the MPC should also work on, the CBN should also work on, to be able to taper inflation.
Right. So much on the MPC's table today. We'll be watching out, for all of that. Thank you so much. That was Oluwatomi Maiwa, analyst, financial derivatives company. Thank you so much. All right, we'll take a moment now. All right, now let's head to the markets. We got that massive green close yesterday, about 0.38%. We have Will coming here with no touch of green, but yeah.
Well, I got a lemon touch. It's close to green.
All right. It's
just one of those, variants, the family of the greens.
So it's somewhat
green.
Oh, okay.
So I'm in the mood.
I'll take that from you.
So the all-share index yesterday, we saw it popping 0.38% to close at 54,662 points. Now, the magic that did that, we're going to see that in a bit, but the market cap is at 24.327 trillion naira. Now, let's look at the drivers for yesterday's game. We saw Boa Cement up yesterday, 3.5%. We also saw Nigerian breweries up 9.94%. That drove the market. We see month-to-date and year-to-date settling at 1.9%. And 3.4% respectively. Now, the total volume of trades transacted yesterday rose by 8.8% to 159 million units, valued at 1.9 billion naira, and it was exchanged in 3,608 deals. Transcore was the most traded stock by volume yesterday. We saw it move 35.24 million units of its shares in the market, and Seplat topped the value chart yesterday. Sectoral performance was mixed. We saw the consumer goods, banking, and insurance indexes advancing in yesterday's trading session. The oil and gas and industrial goods yesterday, they lost in yesterday's trading session. Looking at market breadth, we saw sentiments were almost more than 5 times more positive than we saw losers. We had 26 stickers gaining and 5 losers. That's relatively large breadth for the market to show how positive sentiments were in the market yesterday, and that's a driving point for yesterday's game. We're going to talk to Richard Akimoladun, equity trader, CSL Stockbrokers, to give us more insights as to what's happening. Good morning, Richard. How are you doing?
Good morning, Will. Thanks for having me on your program.
Richard, investors were bullish on Nigerian breweries yesterday. What was the tipping point for them?
Last week, the market, we closed in a positive territory, and the market started on the same note yesterday, and Nigerian brewery driving market in that direction. And the reason behind that is that there's a news coming from Nigerian brewery that they are doing a bonus of 1 for 4, and it has been a while that we see something like this from a company like Nigerian brewery. As I mentioned in the last call I had with you on this program, that looking at Q3 results, though they were good, they were fantastic, but they were unable to drive the market. And we submitted that is this individual corporate news, positive corporate news, that can actually drive listed entity on the NGS, and that's what we are seeing with Nigerian brewery.
So, Richard, we're still talking about the 1 for 4 shares, a bonus that the Nigerian breweries is giving out to investors. I do know that is one of the requirements of the Corporate Affairs Commission is for companies who have their authorized shares, for them to match their authorized shares with their paid up capital. Is that not what they're supposed to do? So this 1 for 4 bonus is not something they're doing just for free, but something that they have to do, is mandatory from the CAC, isn't it?
Yes, there's a pronouncement from CAC that all on-issue shares should be actually cancelled, and you have you can take any route that you think. But what we have seen lately is that we've seen most of the listed entity actually cancelling this unissued shares. But I think Nigerian Bureau is going the way of actually compensating their shareholders with this bonus of 1 for 4.
So, Richard, we were just talking about that. What other companies are going to take on this route? Are we going to see Dangote in the offing? Is there any other bonuses going to come up? We're seeing, you know, that some companies are holding meetings, AGMs, or well, extraordinary meetings right now, just to meet up with this requirement. Can you tell us more about that?
So speaking to Dangote Cement that you mentioned, what we've seen is that there was a notice being issued by the company yesterday about an extraordinary meeting that they are supposed to have by December. And what the major consideration they will be talking about their share buyback. Don't forget that Dangote Cement has been on this route of trying to buy back some of their shares, and this time around they're buying about 10%, and this will be like the third tranche. So if this is approved by the extraordinary general meeting, we'll be seeing Dangote Cement coming to the market to actually sort of mop or buy their shares from the market. And we emphasize that this is going to drive up the share price of Dangote Cement going forward. And we have been seeing that in the market this month.
Richard, hold your thought there, because we still have something interesting to talk about, especially for the African cross-border trading, which just began. Just take a quick break. When we come back, we'll have that conversation. Welcome back. This is Business Morning. We were talking to Richard Akimolado, equity trader, CSL stockbrokers, who was giving us insights on what's happening at the NGX, and some interesting news have been dropping, and it's quite interesting for us to bring it out now. We've seen that the NGX and 6 others are beginning cross-border trading through the African Exchange Linkage Project. I'm just wondering how that's going to work, Laddie, but Richard is going to give us, tell us how that's going to work. Richard, can you tell us how that will work for investors? And so does that mean that I, trading in Nigeria, can buy shares or stocks in South Africa or in Ghana? What's this going to look like for investors in Nigeria?
So the African Securities Exchange Association has been on this for a while. Their mission is actually to link most of the exchange, Africa exchanges, so that you can actually have access to other exchanges. For instance, as a broker in Nigeria, you should be able to have access to Johannesburg Stock Exchange if you want to buy stock for your client there. Because what we've seen lately is that you see it is easier for you to have access to US exchange. There's some app now that you can actually buy stock in US, in other developed countries, but we don't have that. We don't have that interconnectivity of African exchanges. So this is what the African Securities Exchange are trying to achieve. And in this, like the first step of this, they will be able to connect like 7 exchanges. If I'm to mention, Nigerian Stock Exchange and Nairobi Stock Exchange are on this platform, Mauritius Exchange, and some other exchanges. So you can actually give mandate to your broker in Nigeria if you are interested in buying the stock that is listed on Johannesburg Stock Exchange. That's what they're trying to achieve with this.
Richard, this is quite a big news because I know a lot of Nigerians trade foreign stocks. You got the NASDAQ, they trade in the US stocks. And so it's be good to see Nigerians or Africans trading and buying stocks within the continent and not just, going outside of our shores to actually trade. Well, it's good to, get some of these stocks in our, in our wallets and have this good in our portfolio and diversify our resources or our revenue. But we're going to be looking at the MPC figures that are coming in. They're expected to drop in a few hours. We're counting down. What are you expecting, Richard? Some analysts have, mentioned 50 to 100 basis points hike. What's your thinking? Do you think they'll go that route? Do you think they'll hike? There'll be a lot more upside, or is it downside?
So, looking at the outcome of the MPC meeting today, the committees, what they are trying to achieve is actually to tame these inflation figures that keep increasing month to month. And most analysts are pointing in the direction that there might be an increase in rate again today when at the end of today's meeting. But if you look at that in relation to the market, that's the equity market, we know that the equity market and the fixed income market, they are like negative correlated. So if rates are going up now and that favors the fixed and money market, is in favor of fixed and money market, see that fund will be leaving the equity to go to that end. But as I mentioned, some of these corporate news that are attached to some of the listed entity are things that investors need to look out for to take position and take advantage of these corporate news that are coming into the equity market.
Well, I didn't quite catch what your thinking was. What are you betting on? Is it a 50 basis point hike or 100 basis points? Just a quick one.
I think 50 is what I'm betting on.
Okay, Richard Akimoladun, equity trader, CSL Stockbrokers Limited. Thank you for sharing your perspective, your thoughts, the insights you've shared with us. We're going to be looking down, counting down to the MPC results, and we hope that it's going to be numbers that we'll look forward to. Thanks, Richard, for coming on the program.
Yeah.
So, Ladi,
Richard wasn't ready to bet on that.
Yeah, no. I think he's being very cautious here. You know, traders are very cautious. Exactly. I think he's being a typical trader here. Yeah. And I would say I'm very cautious to make numbers. But I'm just saying, maybe I'm going to lean towards the 50, 100 basis points because 150 basis point hike was quite high. We don't think the CBN is going to go higher than that.
Right,
you know?
So that's the consensus expectation. All right.
Yes.
Anyway, we'll watch out for that right here on Channel Television. Thank you so much, Will.
No worries.
All right, that was Will there giving us the details from the equities market. Now, let's move on to other markets, talking about the crypto space that we see Bitcoin there struggling hard there to stay above the 16,000 level. If you look at the fear greed index in the market there, we see it's still extreme fear. As we had yesterday, extreme fear in the market, 22 points. Looks like we're going to be here for a while with all that's happening, you know, with FTX and the contagion risk in the market there. Let's look at the market cap there. We see it's a 783.49 billion now, losing that 800 billion mark, down 2.21% and moving farther away from the $1 trillion mark we're used to in this market. Volume traded 1.73% up. Bitcoin dominance 38.6. Look at the price of Bitcoin now, 15,752. Did lose that 16K support, and some are expecting it to go even lower than this with all the pressure on the market, down 2.55%. Volume traded $33.33 billion, and Ethereum is not left out from the bloodshed this morning. Let's look at the price of Ethereum there, about 1,000 and about 70-something dollars there. It's trying to hold on to that $1,000 level, talking about the price of Ethereum. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Morning.
Morning, Olumide. So we're seeing a lot of volatility in the market now, and it's more downside. We're seeing with Bitcoin losing that 16K level. I guess it's still the FTX contagion still weighing on the market.
Yeah, and I think also further contagion seems to be expanding. If you look at recent reports, troubled crypto investment bank Genesis is also sending the market jitters as it seeks about $1 billion in fresh capital, according to Bloomberg report. And if you understand the dynamic role Genesis plays in the crypto space in terms of lending, custody, and market liquidity, a lot of investors are having trouble and buyers. Also, Bitcoin has dropped more than 75% in value year to date, and that has also means that more than half of Bitcoin investors are in losses. So they are seeing the bearish sentiment for holding that once regarded hedging asset. So it's pretty much not good. And with the FTX contagion, recent reports suggested that they have less cash than what they owe creditors. It said that they, according to their filing report, bankruptcy filing report, that they have about $1.2 billion in cash reserves, and they owe creditors at least $3 billion. That excludes the amount of funds owed to consumers and other stakeholders. So it's pretty much putting the market in a spiral for. But I think sanity will prevail. But how long it will, it all depends on crypto regulation, because yesterday's price action suggested that Coinbase dropped to record it's trading below the $41 support level, and that was triggered by bearish sentiment towards crypto assets.
All right, Olumide, I guess the contagion, continues in that market, and we'll keep on watching to see when it actually wears off. Thank you so much, Olumide Additional, financial market analyst. Thank you. All right, let's look at the top alts by market cap. It's all red on that counter there. eCash there, the biggest downer, down 4.22% this morning. We see BNB there down 2.69%. So it's a bloodbath, we're seeing in this market. And that's it for the crypto market. And that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for the live coverage of the Monetary Policy Committee policy meeting. We'll be covering that live here on Channels Television from about 1:30. So don't forget to join us, and you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can flip over the videos and watch all our other productions. Thank you for watching. I'm Ladi Williams. Bye for now.